Hello and good afternoon to everyone that's currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. So with me here today is my colleague William, a senior marketing executive from Phillip Futures. So how are you today, William?
Very good, thank you. Trent, how are you?
Good. I was the same. So good to have you back. So in this podcast, we will talk about the trading themes for this week and also share how traders can position themselves for the week. So I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. So without further ado, let's jump into our topic for today. So we'll be discussing on the topic sell in May and go away. If you have any question, you can message in the comment box below. Okay, so sell in May and go away is actually a well-known Wall Street saying. Historically, the equities market on average underperformed from May to October. However, as S&P 500 and Dow Jones continue to break new highs at the start of May, should investors sell in May, and why do you think so, William?
Okay, so you are right that S&P and Dow Jones actually they start off May really strongly. Okay, but if you look at beneath the index, underneath it, on the individual stocks, there are actually quite a lot of fat breakout. So fat breakout to me is not a very good sign, because when majority of the stocks are experiencing this sort of fat breakout, it means that the strong investors are actually taking these breakout opportunities to exit the market. So retailers, they might try to enter a breakout, but the strong investors, which is the institutionals, they are trying to exit the market upon the breakout, which is why the breakout doesn't follow through, it drops back. Okay, so now if we look at the three main indexes on US, okay, from technical perspective, so Dow Jones and S&P, they actually break out this week, okay, last week actually, so they break out, and for S&P, it fell to continue to go up. It have a retracement, but for Dow Jones, as we are seeing right now, it break out, but whether it can sustain is a question mark. Now, the main thing is about breaking out is that after the indexes that break out, they are not supposed to come down. That actually means the market is really strong. But if it breaks out and it comes down, it actually means that the market is a bit tiring, which means, like I explained earlier, the institutional are trying to take these opportunities to exit the market. Okay, but even if the tree and Nasdaq is definitely not looking very good now, okay, it doesn't look very good. So although the three main indexes is showing some kind of exhaustion, okay, like it's a tiring kind of setup, lacking of momentum kind of setup, but investors doesn't really need to be very panicked and completely exit the market. Okay, so my personal advice here would be, probably we can try to reduce your exposure in the stocks market for risk management purpose until we see another round of very strong bullish momentum coming back, before you can re-enter with 70 or 80% of your position exposed to the stocks market. Okay, so at the same time, for this moment, I think investors can try to look into the futures market, especially on the micro indexes on US, okay, to find opportunities if because the stocks market is not as performing right now. So futures market definitely is a very good alternative for investors to profit from both bull and bear market.
Okay, yes, I agree with your view. So the US indices are showing possible signs of exhaustion, and investors should definitely be careful on this. So for our next question, right, given the latest company quarterly results back in April, which sector should investor look to invest, and which sector should investor be cautious from your point of view?
Okay, so most of the technology stocks, right, especially the technology giant, okay, like Facebook, Google, these kind of giants, in fact, they actually reports very amazing earnings, but nonetheless their share price experienced heavy selling pressure after the earnings announcement. Okay, so this kind of scenario, in my opinion, using earning reports to trade the current market is really not the best recommended practice to do it. Like I mentioned in my previous question here, we are seeing a lot of fat breakout or breakout that cannot follow through, especially on the technology stocks. So I reckon that investors should be extra cautious on technology stocks in the short term, okay, regardless of the strong earning, but the market is just not favoring in this sector at the moment. Okay, but in the long run, speaking about 6 or 12 months down the road, or more than 12 months down the road, I believe it is still a sector that worth to invest. It's just that the market is not favoring it in the short term. So if we are talking about trading, okay, the sectors that really outperformed recently are the basic materials sector. So basic material means companies that the business model involve in raw materials such as aluminium, metals, oil and gas, these kind of raw materials. Okay, these sort of companies, the trend are really strong right now, which is in line with the inflation on global raw materials at the moment. So they are really strong. So in short, I reckon that the sectors that need to be cautioned will be technology sectors, and the sectors that investors should pay attention right now can be the basic material sectors.
Yeah, I think so too. So the global raw material prices are definitely on the rise now. So based on the sector which you have mentioned, which company would you recommend to investor?
Okay, so on the basic material sectors, out of our, actually, if you do realize that Phillip Futures, we actually offer CFD that allows our investors or traders to participate with relatively low margin. Okay, so you don't need a lot of money to trade all these stocks. So in our US CFD, we have a company called the Vulcan Materials Corporation. So this company is involved in the production and distribution of construction materials. Okay, so if you follow the news close enough, you should read the news saying that even on US new home sales data that is released by the US, okay, if you read all these news and also the latest data, US home sales actually rise to the highest level in May, okay, in April last month. Okay, it rise to the highest level last month over the past 10 years. That is like up to 2008 or 2007 level kind of home sales. That is something that you don't see at all in the past 10 years. But surprisingly, after the COVID, we are seeing such strong demand on the US home sales. That is something really crazy. So I reckon that all these raw materials related companies like lumber, aluminium in particular, and all these raw material involvement are really strong. So this is something I reckon that investors can look at to participate, to trade the current trend.
Yeah, yes, Vulcan Materials sounds quite promising, as you said. So let's see how it will perform for the rest of the year. So to our audience who are interested to invest in US companies, you can actually access them through our Phillip CFD platform. For more details, you can drop us a message on Facebook, and our representative will get back to you. So for our next question, William, what do you think on the proposed capital gain tax by President Biden on the US stock market?
Okay, for this question, actually, if you read the news, the news was about, I think, 2 to 3 weeks back, or more than 3 weeks ago. Okay, so basically, I reckon that the market has already kind of digested the news. So the news, I believe, will not do any impact to the market in the short term. So my definition of short term will be in the next 6 months. Okay, will be in the next 6 months, I reckon, because after the news, the market got volatile for a day and the market resumed its uptrend, which means it's continued to go new high. Okay, so obviously the market is not taking the news very seriously, and yeah, so in the short term, I reckon the news won't do any and will not have any impact to the market.
Yeah, it seems like the proposal doesn't have any big impact on the market. So lastly, before we end the podcast for today, one last question for you, William. Is there any potential risk to the stock market in the coming months?
Okay, the biggest risk at the moment, in my opinion, actually is the same. We have mentioned it in our previous podcast before. The biggest risk is always the fact that the Federal Reserve will actually either is whether the only question here is when they are going to increase the interest rate for sure. This is definitely thing for the Fed to do when the inflation is too high, but the only question mark here is when. Okay, so this thing here is like a time bomb. Okay, it's like a time bomb. So last week, Treasury Secretary Yellen, he actually said something like, okay, the rates of the interest rate may have to increase somewhat to keep the economy from overheating. Okay, so moment he said that, Nasdaq index immediately dropped at like a 3%. That is really crazy. Okay, after her speech at the Atlantic Economic Summit. So I'm not sure whether what is the purpose of her saying that, but what she said here actually kind of tell us that how vulnerable or how sensitive US market is towards the Fed decision on this interest rate. Okay, this is just something not true, but market gets super volatile over it. So imagine if Fed really decide to increase the interest rate, I think we are talking about a drop of more than 3% in a day. Okay. But nonetheless, I reckon that this won't happen in 2021. So I think for the remaining 7 months of the year, we can still see great momentum on US market in 2021.
Yeah, so hopefully it will not be so soon for the Fed to increase the interest rate. So, and now we have come to an end for today's podcast. So to our audience out there, if you have any question or any topics that you want us to discuss next week, you can message in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, William.
Thank you. See you next week. Yeah. Okay. Bye-bye.
Okay, bye-bye.